What is going up, guys? I hope you guys are all having an awesome day today. So we're going to be talking about the simple strategy to beat a bear market. And a bear market is pretty much just a downturn in the stock market, or pretty much any market, real estate, stocks, anything like that. So as you guys can see, we got SPY up here. This is just the S&P ETF. The S&P is just the top 500 companies pretty much merged into one. So you have all those big names like Amazon, Apple, and you just got bits and pieces from it. So you kind of invest in all of them, but not, pay for the, $1,000, the $2,000 share of Amazon. You can buy 0.001% if you can't afford a full share. Yeah, so it's pretty cool. This is a very common way people invest their money. And as you guys can see, we have had a little bit of a downturn. And so we're going to be talking about how to really beat it. So the first thing you got to do is don't sell your stuff. Okay, so, in 2008, so as you guys can see, we were hitting 158, 156 in this area. And then we had this huge sell-off. So this was the bear market of 2008. Many people say it was one of the worst ones to ever hit the stock market in any market. But the following year to 2 years, it was back up, double or almost triple for how much it lost. Within a couple of years, booming. Now we're on this huge bull. So the first thing is don't sell. Many people will say sell and buy cheaper, but you don't want to do that. You want to continue to buy the stock or any property or anything like that, just because if you're buying it roughly every 3 months, then you're going to be almost buying each dip, and then when the market turns around, you will be a lot better off. Instead of just selling, you'll have more shares first of all, and you will be more financially better, because if that's, say you were buying shares up here and then you just continued to buy along the way, you're moving you're averaging down pretty much. So each share is getting cheaper and cheaper and cheaper, and then when we have a turnaround in the market, your profits are going to be double or triple from what they were, just because you're buying cheaper and you're going to be buying more shares, if that makes sense for you guys. So that's the first thing I want to say. Many people will say sell, like I said, sell your stuff and start over. You don't want to do that, okay? That doesn't make any sense, because every market that we've had has had a turnaround. 2008, we had a turnaround. 2009, we killed it, Obviously, we had this huge turnaround right here. We had this big spike up, and by 2010, it was in 2008. So 2 years to recover for that one, and now it's booming all the way up to almost $300. So you always got to keep that in mind here. So never sell your stuff. And the second thing you have to understand is you're not going to want to check the stock or whatever you're buying. You're not going to want to check it daily, just because you're going to be pretty much buying on the lows. So the stock or the ETF or the S&P is just going to continue to go down. So you're going to be checking it every day, and you're going to get really worried, and definitely emotions are going to get to you. Okay, you're going to get scared and you're going to want to sell your stuff. But if you can just be mentally strong, then you can overcome it, and you will definitely be a lot more happy financially. And if this is for retirement, you guys will be able to buy literally the lows like you were buying. It could have a crash back down to, that 110 or that 210 area. That'd be like buying the stock in 2015. So you always got to keep that in mind. Like this right here, this fell below from what it was in 2002. So over 6 years. You know, pretty much if you started investing here and it was time to retire, you wouldn't have had any money. And that's what happened. People sold their stuff because they were scared, and then when the market turned around, they were like, "Oh my God." But the people who held and just were mentally tough now are killing it. Now hold this, and it's obviously probably up, 50% from what they bought it at. So keep that in mind. Another thing is, like I said, don't check it every day because you're going to be buying into the lows. You're going to be buying against a trend. So pretty much that's just a recipe for emotions. You're gonna be looking at it and you're gonna be like, oh my God, I'm down. And then you're gonna look at it again, oh my God, I'm down. But over time, you're gonna get those profits, and it's gonna be very, very, very good for you. Trust me. All right, the next thing you want to do. So if you're a saver like me, I like to save all my money, and I like to buy things that I see value in. So this is going to be a time for you guys to make a ton of cash the following year or 2 years. Just because if let's say we pull up Apple here, let's see. So let's go AAPL. Let's click enter here. It might take a minute to load because I have so many applications open. All right, so Apple here. So this is 2002. It's hard to see right here. 2005, 6, 7, 8. So 2008 was right around here. So we had this huge sell-off. Apple hit $12 a share. Okay? And imagine if you would have loaded up on shares, would have happened. You would have made probably around $35,000 if you would have put $1,000 into this. So you got to keep that in mind, guys, because I know the market's been crazy and the last thing you're going to want to do is buy stuff. But this is the time where you should be buying all these different shares of companies. Apple, Amazon. Amazon's down to $1,500. It was at $2,000. Okay? If you buy it now, in a year it turns around and hits $2,000, you make $500 like that without lifting a finger, with you using your money, to make more money. And then you can buy more things or just continue to hold it. That's what you have to understand is, buy when things are low. Don't get scared. I know emotions are going to get to you guys, and it's going to be really, really crazy. But if you look, this stock has a tendency to, if you're an investor or a trader, you will understand. But if not, this yellow line right here is a 200 moving average line. So this is within the past 200 days, this is all the closing prices, averaged together. So it's at 146.21. So if you know anything about stocks, history tends to repeat itself. So this stock has hit this line multiple times. So realistically, we could get another push back down all the way down here. More likely we'll probably have some support at 200 or 195 or 150 at least. But still, you're going to be buying the stock like you were buying it 2 or 3 years ago, and it's going to turn around. This is the largest company in the world. This is Apple. It's at $212 a share. This is a time where you guys should be loading up on shares. I'm telling you guys, you will not regret it. So that's another rule. You always want to keep investing your money, and that's why I say every 3 months, because you're going to want to just keep buying and buying and buying, and then if it turns around in a year or two, then you're going to make that money back like that. And I'm not saying to buy every single day, new stock. Every 3 months, if this is something long term, do it. If it's something, swing trade, you could be looking for opportunities weekly. So keep that in mind. There's still money to be made in a bear market. You just got to be a lot more cautious. And, a very important thing is when you lose money, it's, emotions. I keep saying it, but you guys will not understand until you do it. So emotions will get to you. Just stay mentally strong. So those are pretty much the basic and simple way to, make money out of a bear market. So I hope you guys enjoyed this video. Please sure to like, subscribe if you're new. If you have any questions, you can shoot them in the comments down below. So that's it though. Remember to always stay happy, stay positive, and I hope you guys have a fantastic rest of the week. Take care, guys.